It's hard enough to decode what's going on in the real estate market today without big major media companies intentionally misleading buyers, sellers, real estate practitioners, mortgage brokers, and agents just to get headline clickbait and to sell advertising on their website. Unfortunately, that is exactly what they're doing. And what I'm going to show you right now is a article just published on CNBC.com. The housing market is heading into 2025 with a worrying supply trend. So, this worrying supply trend, they're trying to create doom and gloom and scare people. And the problem is when you intentionally mislead and mischaracterize information, what's happening in the market, you cause people to make the wrong decision for their family and for their finances. And that's exactly what CNBC is doing. So let me show you why this headline is so insanely misleading. A worrying supply trend. This is the supply trend that CNBC is talking about. And it might look worrying, I guess, if you start here in March 2022 and you look at the supply going up from there. And if we look at what was happening with mortgage rates in March of 2022, well, we come here, we've got September, October, February, March. We're at 4.45%. In March of 2022, well, you see the inventory rise kind of coincides with this interest rate rise pretty closely, actually. So here's what rates are doing in March of 2022. And so this is what inventory is doing in March of 22 until today. But this worrying supply trend, let's just take a little bit more, like I don't have to go back to the 1990s, but let's just be a little bit more realistic. Let's go back to 2018 and look at the supply trend. By the way, in 2018, 2017, we were in a pretty strong seller's market. And so you see, supply wise, they've got 953,000 units here. We were at 1.3 million units. That's insane. That's almost 50% more units, right? And this was September of 2018, right? Housing market slowing down. You got some inventory starting to sit and grow. We don't have COVID happen until right here, right? We're still well below pre-COVID inventory levels, not to mention the explosive population growth and new household creations that have occurred since 2018. So this worrying supply trend, well, it's actually not worrying at all. In fact, we're still in a very, very, very deep and very strong seller's market with not nearly enough homes for sale. That's why we have an affordability problem going on. The interest rate being 7% wouldn't be a problem if there was sufficient inventory available. Sellers would be a little bit more negotiable on their price, have to price more attractively to attract a buyer. The reason home prices are so high and the home prices are going to remain high is because inventory is so low. We could have inventory double from where we're at, and we'd still be sitting in a seller's market. So don't let these misleading headlines, like there's a worrying supply trend, cause you or your family to make the wrong assumptions and the wrong decisions about your real estate plans. Don't wait 12 months thinking that home prices are going to start coming down. We're nowhere near a scenario where that can happen with the supply levels being as low as it is. Um, just it's a shame to see. So I want to point it out when I see, they want to sell right here. CNBC is willing to lie to you and willing to convince you to make the wrong decision and lose money so that they can sell advertising, get you to click on articles, get you to read advertisements, and turn around and make money for their corporate headquarters here. And by the way, this is the person that writes this article, right? Diana Olick is a person who's willing to look at consumers, publish this national media, and go, well, this is a worrying supply trend. This isn't a worrying supply trend. This is fantastic to see. Let's get some return to pre-COVID levels. Let's get out of this inventory shortage where people were getting 10 and 15 offers on homes and having to waive inspection contingencies and waive appraisals. Like this headline should be the housing market is finally seeing some return to normalcy and is finally seeing a supply trend that's good for both buyers and sellers. That's what this should say. Moving on, Rocket Mortgage, we keep hearing about them. Recently saw that they have a joint venture partnership with Charles Schwab, and I'm just going to go to Charles Schwab Mortgage. And if you come here to Charles Schwab Bank, you can see this joint venture, home loans provided by Rocket Mortgage. And Rocket Mortgage, I could go on and on with anecdotal stories about them, but Charles Schwab, big investment bank, a lot of high net worth clients. So Schwab partners with Rocket Mortgage. What's wrong with that? Well, this is recent, October of this year. Justice Department sues Rocket Mortgage, appraisal management company, and appraiser for race discrimination in mortgage refinances. So, you know what doesn't happen with small mortgage brokers and local mortgage brokers? Discrimination of any kind. We're happy to get every single piece of business, every person that trusts us to reach out and inquire about a mortgage, we break our backs to issue a mortgage for. Rocket Mortgage, this isn't the first time they've been accused of illegal activity. We have again, more recently, December 31st. Now, instead of the Justice Department suing Rocket Mortgage, you have the Consumer Financial Protection Bureau accusing Rocket Mortgage of a kickback scheme. Agents and brokers receiving payments and favors to direct clients to Rocket Mortgage and affiliate companies. So they're inflating their rates, inflating their origination costs to spin off enough extra profits to give illegal kickbacks to people to send them business. And this is what they do. Not only are they just absolutely horrible to work with, they'll leave you frustrated, unhappy, distressed, misled, and confused all the way to the closing table. But their rates actually aren't that competitive when you actually shop around with a competitive mortgage broker. And they're willing to do anything, illegal or not, to mislead you and to pad their own pockets with profits. So just beware that, when you are a customer of somewhere that's an investment bank or even, all kinds of entities partner with Rocket Mortgage. They make a lot of profits off of their customers. Anytime you see Rocket Mortgage, just remember you're likely starting to trust all your finances and to put your next home purchase in the hands of a company that's willing to discriminate, willing to lie, cheat, and steal if it means they can make an extra buck. And to think that they're not going to do it on your mortgage when you choose to work with them would be ridiculous. Moving on, FHFA finalizes new housing goals for Fannie Mae and Freddie Mac. So the Federal Housing Finance Authority gives direction to Fannie Mae and Freddie Mac about what kind of mortgages they want to see issued. And in particular, with this one, you can see they've got affordable housing goals. On the single family side, they're directing Fannie Mae and Freddie Mac to make 25% of the purchase mortgages acquired by Fannie Mae and Freddie to go to borrowers earning less than 80% of the area median income. So the area median income, basically 80% of that is people who are struggling to afford rents, people who are struggling to get into homes. And so what Fannie Mae and Freddie do when they get directive like this, is they create programs and incentives that make it cheaper and easier for borrowers to purchase homes. This is a really, really good thing because we know that the people that make 80% of the AMI or less are disproportionately minority people. And if we dive into the profile of buyers and sellers a little bit for 2024, which we're going to do a video on all the interesting facts that were in this report, but this is race and ethnicity of home buyers, 1997 to 2024. This is insane. 83% of home buyers identify as white or Caucasian. Only 7% identify as Black or African American, and 6% as Hispanic or Latino for Asian Pacific Islander. 83% white or Caucasian. This is an underserved population. So when we see a directive from FHFA that's urging Fannie Mae and Freddie Mac to make 25% of their purchase volume, the loans that they buy, serve people that are 80% of AMI or less, this is a very, very good thing, right? This may come at the cost of better qualified borrowers. Fannie Mae and Freddie Mac may increase the cost of better qualified borrowers to be able to offset and give some of these incentives and programs to people that are 80% AMI or less, but it's a good thing, right? We need more home ownership in this country. Going into quick interest rate forecast. Here we've got a lot of the big players: National Association of Home Builders, Mortgage Bankers Association, Goldman Sachs, Housing Wire, Redfin, Fannie Mae, all of them. These are rate forecasts for 2025 where we're going to see. And, we're solidly here in the mid sixes for averages. High end, we're seeing up to 7.2, 7.25. And these are forecasts for where we're going to be at the end of 2025. So where are rates heading? The most optimistic, NAR and Housing Wire saying 5.75, best case scenario. I don't think that's very likely. Our assumption is we're going to be best case somewhere in the 6.4 range, 6.3 range at the end of 2025. You can actually pay a couple points and get those rates today, or get very close to those rates today for most buyers, most borrowers. And, looking back at this picture here, we're starting to see a little bit of leveling off, and there's some seasonality in here. As we get into the spring, we may start to see inventory fall a little bit as more buyers come into the market. So, if we're looking back, you could say as a buyer, this is the best time to buy a house since before the pandemic really, really kicked off and things got crazy. You've got more choices today than you have since 2020. A lot of homes out there to choose from. Not as many buyers in the market as we saw back then. You can negotiate some incentives. You can take a little bit of time and probably still access the rate today by paying a couple points that you would be getting at the end of 2025 if you waited. So options available to you. Where are real rates sitting today if you're buying a home today? This is the 2022 chart. Again, we've shown this in some other videos. We're basically the same place that we've been for the last 2 years. We got a lot of consistency in here, sitting right at the 7.07 mark. For most buyers, you're going to have to pay a little bit of points to get to that mark. But FHA, quite a bit lower, right? FHA, while there's mandatory mortgage insurance for the life of the loan, they're giving you a pretty good deal on the rates. So don't forget to consider FHA. VA, also pretty competitive there at the 6.4. So any veterans, take advantage of that. The jumbo rate's not that much worse than the conventional. So if you're looking to go above the conventional limits, which I think just changed to right around 800,000, if you're looking to borrow more than that, you'll be in the jumbo category, looking around 7.3. So altogether, not that bad. We're kind of sitting in the same interest rate environment we've been in for 2 years. We have a little bit more homes to choose from. We're still in a strong seller's market with not enough inventory. We're heading into the spring season. What we're going to see is a lot of buyers hopping into the market here in January, February, March, and April. And then at the end of April, the sellers catch on. We start to see new listings peak the second week in May and then stay high. And then we'll kind of be in that typical summer season, May, June, July. And then slowing down in August, September, we'll start to see inventory and buyers come out of the market again. So getting ready to ramp up. Now's a great time to get pre-qualified if you're thinking about making a move this year. kind of get your bearings on what prices look like, what your mortgage could look like, how much equity you have in your home. Good time to get ahead of everything. And then as inventory starts to come online in May, you're ready and know exactly where you're going to be. If you have any questions, I'm Don Harkins, and we do property management. We do mortgages. We do residential and commercial sales and leasing throughout all of Central Florida and the Space Coast. Thanks for watching, and have a great weekend.